Welcome to Lesson 6 of the Business in the Real World unit. In this unit, the key questions are: what is meant by a limited company? What are the benefits and drawbacks of this legal structure? What is meant by a private limited company? What are the benefits and drawbacks of this legal structure? These are the key terms. Read through them carefully. Limited company, private limited company, legal structure, business entity. Let's start with a limited company. A limited company has special status in the eyes of the law. These types of companies are incorporated, which means they have their own legal identity and can sue or own assets in their own right. The ownership of a limited company is divided up into equal parts called shares. Whoever owns one or more of these is called a shareholder. Because limited companies have their own legal identity, their owners are not personally liable for the firm's debts. The shareholders have limited liability, which is the major advantage of this type of business legal structure. Task: pause the video. Using the knowledge you have gained on this topic so far, can you list the main differences between a business and a company? There are two main types of limited company: a private limited company, Ltd, a public limited company, PLC. The key differences of each structure are outlined in the image below. Private limited companies can't sell shares to the public. People in the company own all the shares. Don't have share prices quoted on stock exchanges. Shareholders may not be able to sell their shares without the agreement of the other shareholders. They're often small family businesses. There's no minimum share capital requirement. They end their name with the word limited or Ltd. Public limited companies can sell shares to the public. They usually issue a prospectus to inform people about the company before they buy. Their share prices can be quoted on stock exchanges. Shares are freely transferable and can be bought and sold through stockbrokers, banks and share shops. They usually start as private companies and then go public later to raise more capital. They need over £50,000 of share capital, and if they're listed on a stock exchange, at least 25% of this must be publicly available. People in the company can own the rest of the shares. They always end their name with the initials PLC. Task: pause the video. Can you write down at least 3 advantages and 3 disadvantages for a public limited company, PLC? Here are some of the advantages and disadvantages of a public limited company. Task: pause the video. Let's have a go at another exam-style question. Read the question below and you will be required to explain your answer, setting out a purpose or a reason for your choice. Made Up Organics, a company selling organic makeup and toiletries, is owned by Jenna Harrison, a sole trader. The business has been growing over the past few years, and she is thinking about becoming a private limited company instead. Explain the advantages and disadvantages of doing this. 6 marks. A business has to choose its legal structure. Here's an example. 1. The supermarket chain Morrisons started when the sole trader, William Morrison, started trading from a supermarket stall in Bradford. The business did well and he started opening stores in the Bradford area. 2. In 1940, the company was incorporated. This would have protected William Morrison's investments and would have made it easier to raise money so the company could grow. 3. The company continued to expand. In 1967, the company became a public limited company to help raise the funds so it could expand further.